I think the challenge in the first deal is accepting that to get into a deal, you have to network. And the networking part was so completely foreign, especially after being in your house for 2 years, not being able to go out and really meet a lot of people in person. And then doing it on a computer was extremely awkward. And I think that was the hardest part, is just believing you can do it and then go out there and take action. Because if your mindset doesn't believe you can do it, you're not going to network. You're not going to go to things in person. You're not going to invest the money in yourself.
Are you ready to take the next step in your multifamily investing career? The time has never been better than now. Think Multifamily's Deal Analysis Workshop is a comprehensive live training course that will help increase your skills, knowledge, confidence as an investor before you invest. This workshop is a unique experience that provides hands-on instruction and guidance directly from Mark Kenney, who has completed over 100 multifamily syndications valued at over $1 billion. This course goes beyond theory, as you will be presented with real case studies and practice scenarios to work out in class. By the end of the training, you will have significantly improved your ability to evaluate deals quickly, make informed decisions, and take your investing skills to the next level with confidence. For more information and to register for Think Multifamily's Deal Analysis Workshop, go to thinkmultifamily.com/DAW. Use code Whitney100 to save $100. The Deal Analysis Workshop is designed for both beginner and experienced investors. Whether you are looking for a foundational understanding of how to analyze multifamily investments or looking for fresh insight on how to pivot your analysis method for this current market cycle, this is a workshop you have been looking for. Register today at thinkmultifamily.com/DAW. Use code Whitney100 to save $100. This is your daily real estate syndication show. I'm your host, Whitney Sewell. Our guest today is from Honolulu, Hawaii. She and her husband owned and operated a swimming pool business for over 30 years. Her name is Debbie Wilcox. She's always had a passion for real estate and knew that they still wanted to pursue their dream, but they had to make some major life-changing decisions to do that. Today, Debbie has invested in over 2,500 units as an LP in various markets throughout the U.S. and invested as a general partner in over 130 units in Idaho and Missouri. You're going to hear us talk about that transition today and really her steps to getting to that first deal and potentially even the second deal. Her and her husband made a big decision, right, to give up this business of over 30 years. So much time invested there to make that happen, but they have done just that. They have made it happen, and you're going to hear that today. Debbie, honored to have you on the show. 30 years in business. I mean, you give that up to pursue real estate. I'm looking forward to hearing why that happened, how that happened, why you decided to do that, because that seems crazy probably to a lot of people, right? Welcome to the show.
Thank you, Whitney. It's a pleasure to be here.
Debbie, give us a little more of that story, though. Tell us a little about maybe that business, success of that business, or whatever, who was involved, but then let's dive into that transition. I know there's many listening that want to do the same thing and get into the syndication business.
Yeah. So many years ago, I guess 30 years ago, my husband and I were in college and we read Rich Dad, Poor Dad, like so many of you out there have. And it was incredibly inspirational. We knew real estate was what we wanted to dive into. But being in college, lack of funds and money and capital, getting into real estate investing was not going to be easy. So we jumped ideas and said, okay, we'll start the swimming pool business. Lots of swimming pools in Hawaii. And we did that while we were in college. So fast forward, here we are 30 years later. But along the way, we still were able to dabble in some long and short-term rentals. Not enough to scale, but enough to keep us interested. And I would say about 10 years ago, we just started to experience that burnout that I think so many mom and pop business owners might experience after 20, 30 years or a W-2 job, anything like that. I think you can relate that at some point we just started to burn out. But the problem was, what are we going to do and where are we going to go and how are we going to do it? I think deep down, we knew we wanted to do real estate. But at that point, after 20 years and a successful business, it's hard to walk away from something like that.
Especially as much time that you all spend in that together to build that. I mean, blood, sweat, tears, right? It's hard to give that up.
Yes, exactly. And we still had our son at home. We have a 23-year-old son at the time. He was home. And just to uproot and change our lives, it felt too risky. And so we just kept trudging along, did more of the same. fast forward 10 more years, and now our son's out of college and we're home alone, and we have this big, beautiful home and this great business, but we're just not feeling fulfilled completely, right? So you get to that feeling of, so now what? Is this the time? Do we do it? And discovered podcasts about a year and a half ago. I know they've been around a lot longer, but just discovered them, right? And so stumbled upon many great ones, including yours and Bigger Pockets, among others. And I just found myself obsessed, hours and hours every single day. I kept shooting my husband, listen to this, listen to that. So we ended up doing this for like a year, sending each other podcasts that we had to listen to, and basically started self-educating on the different ways we can get started in real estate. And what we didn't realize what we were doing was kind of planting some seeds about maybe how we might make our exit from our business. And then COVID hit. And so as we were thinking we're mentally ready to make that jump, we couldn't go anywhere. We couldn't go to any conferences. So we did everything virtually, and lots of books, needless to say. Well, we ended up about I'd say September of 2021, we decided to sell our business, and the real estate market there was just still booming. And, you know, people knocking on your door, trying to offer you money for your home. And we thought, I think this is the time. If we're going to do it, this is it. And we're not getting any younger. And so that was another scary thing, is, to do this late in our life, to try something new and take a chance. We didn't really tell our family and friends. We just made the decision on our own. We didn't want to be influenced, by you're crazy, you can't do that. But we went and did it. And so we are retired, and we made the move to Southern California so that we could go to events and visit markets and just network in person. And also our son's attending college here in Southern Cal. So that's like icing on the cake for us. It's been great.
Of course. Wow. So you all moved as well.
For now. I'm not promising it's permanent, but it's been fun for the last year, just doing something different. It's like starting a whole new chapter at this stage of our life. So it's been very exciting.
Did the business sell pretty quickly, or how did that go?
Yeah, that was actually a weird thing, because it's kind of funny. We kind of liken it to multifamily. When you're looking for property, you're kind of looking for those burned out mom and pop owners. Yeah. So this big mainline company originated there, came in looking and kind of buying up some smaller mom and pop swimming pool companies. And we just thought, this is like perfect. We were ready to close that door and move forward. So we got lucky with that.
That is a blessing for sure.
Yes.
What was your all's, I guess, game plan then, you and your husband, to move in, and to be that serious about moving into the real estate business? What was your game plan moving forward, just to have the confidence that this is going to be successful?
That's the part, right? So the confidence, that was that building up that year and a half of self-educating, talking to other investors, going to meetups, getting more familiar, because there's that fear of failure, which I think is so huge. And that is probably, for me, I think, the number one reason people don't try new things or take risks. And so we definitely had that fear of failure, but we just thought we'll get educated, because knowledge cures fear. We'll surround ourselves with people who think like us and who have the same goals and same drive, and get educated. So what helped was we decided to join a mentorship group. And I have to say, even after a year and a half of self-educating, it wasn't until we invested in ourselves that way that really propelled us into this space. So it was hard, because in the beginning you're thinking, oh, I have to spend all this money. A lot of programs might cost, $20,000, $30,000. And I just, you think about how much money you can lose in multifamily if you don't know what you're doing, or if you go the wrong path. It is hundreds of thousands of dollars. So this is like, insurance, and you have mentors and coaches who can hand walk you through deals. And then you have a whole community of other investors that are also resources to you. And that's been invaluable.
It does blow my mind. And it's just it's a mindset thing, right? Because we're willing to go and spend $50,000, $100,000, $200,000 on a college tuition, and really oftentimes not know what we're going to do with it, right?
Exactly.
We
I
get
do
that piece
nothing
of
with
paper,
it.
we have no idea what we're going to do with it, right?
100%.
But then, you think about the potential of, a real estate business, and, the level of income and all these things that could happen through that kind of business, but we're not willing to spend 10, 20, 30,000, whatever it is, on a mentorship program to gain that education, and really somebody to help hold your hand a little bit, right?
Absolutely.
And maybe you could speak to that value quickly before we move on, but, the program, or some kind of mentorship helping you get to the first deal.
Right. Okay. So getting into that mentorship, we did that last September, 2021. And because we were here in California, we were now able to take full advantage of attending the many in-person events they hosted. And so we were like, we're doing this for a year at least. Let's just go to everything possible. And it was actually going and being a part in person, meeting people, meeting investors, building those relationships that sometimes is not as easy to do on Zoom. You know, you do a lot of Zoom networking calls, which is great, but you don't make those quality connections like you do in person. And so it was doing that. That community allowed us to connect with some really great people and other investors. And we got into our first deal within 4 months. We, got something under contract. And by 6 months, I believe it was in March, we were closing on our first 33 unit in Idaho, and we syndicated that. So that was incredibly valuable.
That is that. And what happens after the first deal? I mean, like how long till the next deal, or has there been another deal? Give us a little bit there.
Yeah. So we got into that first deal, and it was great because the team that we partnered with, they had a little more experience than us, and we were brand new. So being that we just liquidated out of our assets, we were able to help out on the KP side. And so got learning more on the asset management side once we got into that deal. Now, in the next 3 months, we joined an affiliated mastermind group with this group, just kind of taking us to another level. And almost immediately, we closed on a JV deal in Kansas City. So that kind of got us into that next deal, but pretty quickly. Like, it was a 54 unit in Kansas City. We JV'd that. And then in that same group of people, another network, we partnered again 2 months later, just in November, actually. We just closed on a JV deal in Springfield, Missouri. It's a 43 unit. And the same is on all those deals. We're assisting out on the asset management. Like I said, I'm trying to focus in that area and learn from these experienced partners.
Yeah, I wanted to highlight that. You and I were talking about it before we started recording, and you had mentioned that you all thought you'd probably come into the business by raising money, and often people do come into the business by building a network, being able to raise some money, partnering with another operator who has more experience, just like you were talking about. However, you figured out that maybe that wasn't the path that you all were going to take. Talk through that a little bit.
Yeah, I did think that originally, because of my first thought, I think like many people who are exploring getting into multifamily syndication, they tell you to think about, your strengths. What value can you bring to a team? Because it's a team of people and you don't want everybody just like you. Well, initially you think, well, what value do I bring? I don't really know. I don't know what I have, but I'm going to do capital raising. I love talking to people. I love educating them about these opportunities that we have. And so, but that's a whole nother aspect of the business that I wasn't quite ready for. And when we got into our first deal, I did not capital raise for that. So it wasn't a big raise anyway. But what I found is we were learning asset management. All of a sudden, all those years of being in business, we just wanted to analyze operations and the numbers and the budget and monitoring income and expenses. And I thought, oh, here we go. It's almost like the business mindset was coming out. And that's just where we naturally are drawn right now, even if we're thinking maybe capital raising down the road. And for me, I think I'll have more confidence as I get a few more deals under my belt for credibility purposes. So so it was initially capital raising, and maybe that next year.
Yeah, it's just great to be able to pivot when you can see, hey, I can, this is my thing over here, or I can get into this, or maybe I already have skills that can apply to that. I think that's a great skill set in itself to be able to pivot, when you see something else, or the willingness to do that. All right, so speak to some challenges getting to the first deal. Well, syndicating that first deal. What was the biggest challenge for you all?
I think the challenge in the first deal is accepting that to get into a deal, you have to network. And the networking part was so completely foreign, especially after being in your house for 2 years, not being able to go out and really meet a lot of people in person. And then doing it on a computer was extremely awkward. So that was a challenge for us. My husband and I, although if we feel you're social, but when you feel like you have to actually purposely network, it gets a little, can be a little stressful. But I think the more you do it, though, it's like getting out of your comfort zone. You just become more natural at it, or become more comfortable, I guess. And so you just have to grow that way. And I think that was the hardest part, is just believing you can do it and then go out there and take action. Because if your mindset doesn't believe you can do it, you're not going to network. You're not going to go to things in person. You're not going to invest the money in yourself. So those were the things I think we got over pretty quickly in the beginning. So
do you think a key part of that was obviously the commitment of selling the business, right? I mean, I just think there's, I was just sharing, with someone the other day. It's like when you don't have a plan B, your day at the office looks a lot different, like your
oh my
mindset
God. Oh,
towards, looks different.
that was crazy because that was, you have your little voices on your shoulder, and I was just like, let's just do it. Let's go. We have time is of the essence. And my husband, he was so, good, logically, rationally. Okay, well, what is plan B if this doesn't work? So I said, okay, let's talk about that. Let's think about that. Even though I didn't really like the idea of that there was a plan B, I just wanted to make A work. But plan B was we can always go and invest in another swimming pool business because it's what we know. We could come back and start it again and do what we know. So I think that helped. Is yes, have your plan B in your mind. But I'm more inclined to just feel like there's no other choice and we just have to make it work. So
yeah. Sometimes I think it's helpful. We all want that something we can fall back on, right? We think about minimizing that risk and all that. However, I just think it changes your mindset towards what you're doing if there's nothing to fall back on, right?
Absolutely. Well, what actually helped too, because there's that financial side, right? People say, oh, if I walk away from all that, we need income. We need to survive until we get this all figured out. So that was part of our planning to do this jump from the business, is that we thought, okay, if we do this, we'll have some capital and let's start investing as LPs. So we got into about a dozen deals in that first probably 2 years. We started actually before we sold our business, so we could kind of get the proof of concept that multifamily syndication investing is going to work for us, or that we like, and kind of see the whole strategy from like, we probably invested in 6 different operators. And so we really got a feel for their markets, how they do it, how they communicate, and how effective their plans are. And so that was really helpful. And so that's why I also, in our first deal that we syndicated, I got a real good feeling for the kind of communication I liked from different operators. Some gave a lot, some gave none. And I thought, I can have 2 deals, 2 different operators performing the exact same way. But if this one doesn't communicate, then you're breaking down that trust you have with your investors. And I just feel like communication is huge in that respect. So I kind of volunteered on our first deal that I would like to practice, doing the monthly investor letters. I'd seen a few. And so I help out with the communications that way. So that being a passive investor has been great too. And I think ultimately that's our goal, right? Everybody, you want to be passive down the road, but I feel like we're not quite ready to just sit around and collect the checks. I want to still be active.
Yeah, I think that's a key point too, that you all were able to invest, 12 different deals. That's pretty significant, right? And 6 different operators. I would say majority of people coming into this space or trying to get started can't do that. However, I often suggest if you can, it's great to invest passively in a deal, right? And you do learn so much. Like you were talking about, you get to talk to an operator, you get to see the deal, you get to learn more about the market, see how they operate. Hopefully you get to see some of their underwriting and ask those questions about how they looked at this deal and how they prepared for, whatever downturn or what are the negatives about this deal? What's their plan? And you're going to learn so much. And the communication style as well. I think, I've done that as well. There's some select operators I've invested with, and I learn a lot from them. And there's a lot of operators that invest with us. And so we give a lot back and forth, by even doing that. But so what would you have done different? Thinking back, just a couple years ago, or is there anything now, knowing what you know now?
I can't think of anything off the top of my head that I would do different. My first thought is, I wish I'd done it sooner. But, everything happens for a reason. And I really felt like our timing was right. Like I just have to have faith that was the right time for us. It all, aligned, because for us to dive, like you were saying, deep into these, like even these LP deals, that wouldn't happen unless we were ready to really walk away from our other assets. Right. And then we wouldn't be doing that if our son wasn't out of the house. Like everything in your life, I just feel like it all lines up how it's supposed to. And so rather than say, I wish I did it different, I don't think I'd be here if I did do it different. So,
yeah. What's a way that you've recently improved your business that we could apply to ours?
Recently improved the business. Well, I guess my mind right away goes to asset management, because I feel like in the last few years, even looking at the deals we were in, I don't want to say there hasn't been a lot of work required, but boy, deals really we're doing great with minimal effort, I would say. You just couldn't go wrong. Rents have been going through the roof, right? But I think now to improve on your business, and with the way market's going, costs rising, and interest rates rising, the profit margins are getting slimmer, and you have to be so much more conservative in your cash management and watching your operations very tightly. So I would say it's really key right now to hone in on that. I mean, if you've been used to just, doing things the way you were the last few years, I feel like you're probably not going to hit your goal, your metrics on your returns for your investors.
I'd like to know too, especially since you've invested in 6 different deals, but from, the passive side, but also now that you're on the active side as well, what's been your best form of communication that you've received and why, from these different operators?
I would just say it's the best communication is the reliable, dependable, consistent monthly newsletter. Some of them do a video. I like that too, but it's not necessary. And I also really appreciate when the operators also share the bumps in the road, not just telling us, everything's this and that. I mean, if there's a, leaking plumbing bust, or, we've got 3 evictions this month, you want to feel like you know everything that's going on, but it's an opportunity for the operator to show you as the investor that, yes, we have problems, but we're going to show you that we're going to get through this and how they're going to do it.
Yeah, I like that. No doubt. We're doing videos now as well. And there's a lot more work to go into making that happen. But we've been trying to make that happen, and we've been doing it monthly from the beginning, not videos from the beginning, but monthly updates. But yeah, there's an art to that, to say the least. We want it to be easy to consume, right? But right. Like you said, you provide too much, and then investors don't even read it all, right? And I understand, right? We all get some emails, but that's great feedback. Also, what about what would you say is the biggest challenge for you now, scaling to the next level?
Scaling to the next level. Well, first of all, just the market right now. Like, I've kind of thought this year, I'm not really sure the opportunities. I mean, I know their deals are coming. I'm just going to be patient. So I just feel I don't want like a year and a half ago, I probably would have jumped into anything, just trying to get that first deal. I am a little bit more conservative. And so that is a challenge. I'm not sure, just the way sellers are right now, what kind of properties are going to be coming up because sellers are forced to sell due to their debt. So I'm going to be patient and just use this time to get better at the asset management systems and also to delve into more capital raising learning. So that I'm going to use this time in the next 6 months, I think, to just hone in on skills and postpone maybe more acquisitions a little bit later in the year.
Debbie, what are some of the most important metrics that you track? Could be personally or professionally.
Well, with the business, I am very on my daily habits. I think it's more for me just trying to, if I think of the goal, I have to narrow it down to what am I doing every day to get there? And those are my metrics. Every day, am I putting the time in? If I'm not on my meetings with, asset management calls, then the downtime, am I continuing to further my education? What am I learning? How many books am I reading? Because that always continues to increase your knowledge in the business. And so for me right now, I think about it, I've only been doing this a year, but I felt like we've done so much and already accomplished so much. So I'm trying to keep it all in perspective, but you have to always be learning, right? So that's for me, just forwarding my growth every day with little things, little habits, whether it's my mindset, whether it's real estate, whether it's systems. But for me, I just have to keep moving forward every day. Otherwise,
that's
all
awesome.
that.
Yeah, all those things are important. And like I said, tracking those things every day. And any habits, though, while you're talking about any habits that you could share that have produced a high return for you?
That produce a high return. Well, for me, it's a high return for myself, my personal. So again, it's my mindset habits. For example, every day before, getting out of bed, you wake up, and before I grab my phone, before I get on the computer and do social media, I do try to just close my eyes and have those moments of what am I grateful for? And just every day could be something different, it could be something big, it could be something little, but I do try to start my day on that positive mindset. That's my foundation for the day. And also on that note, I would say that I also try to minimize watching the news because I watch little to no news. I used to be a news junkie. And what you don't realize is subconsciously you can't figure out why you start your day and you're angry or you're sad and you're just pessimistic about the world. Now compound this throughout the day if you're obsessing watching news all the time. So I don't like to start my day with it. I don't like to end my day with it. And I recommend putting it in your feed on your social media, read it, and then you can just shut it off when you're done. When you watch it live, it's so consuming and so emotional. And I feel like that has improved me so much over the last year, just to not obsess with it anymore. Yeah.
I think it is something that man, it can dominate your
Yes.
feelings, right?
Yes.
And I think I used to watch a lot of it as well, and eventually it's just like, you know what, this is not helping me in any
Right.
way, and over time it just pulls you down.
Mhm.
And there's just a few sources now where I know I want to go and read some specific things or whatnot, or keep up on obviously certain economic trends and whatnot. But
Right.
man, most of the sources that where most of us would know of, right, where you can get
Uh-huh.
your news, man, you just have to be careful about what you're putting in, right? What you're
Yeah,
putting in is gonna
exactly.
what's coming out. So
Exactly. Everything in moderation and just be mindful of it on a daily basis.
Debbie, how do you like to give back?
Well, right now I feel like I'm spending a lot of time just sharing with everyone I possibly can, especially my friends and family. They're all thinking, what are we doing? I'm just trying to give back and share what I am doing, and introducing them to the concept of multifamily syndications, which so many people just really don't even know exists. And if you talk about it, they think it's some kind of weird Ponzi scheme type of thing, but they just don't understand. So I'm trying to share my knowledge and educate everyone I can about what we're doing. And so that hopefully that they too can build themselves some future, real estate wealth.
Debbie, thank you so much for your time. Appreciate you being on the show, even being a listener of the show, and just hearing your story, getting started, and giving up the business of 30 years. I think it's such a big step for you and your husband, right? I mean, no doubt the time, the blood, sweat, the tears that went into making that happen. It's so much to walk away from, to say the least. And so congratulations though, on making it happen and doing it and sharing that with us today, and how you did that. Tell the listeners how they can get in touch with you and learn more about you.
Well, you can reach me by email for one, Debbie Wilcox, 111 at gmail.com. You can find me on LinkedIn under my name, as well as Facebook.
Thank you for being with us again today. I hope that you have learned a lot from the show. Don't forget to like and subscribe. I hope you're telling your friends about the Real Estate Syndication Show and how they can also build wealth in real estate. You can also go to lifebridgecapital.com and start investing today.